Was this the absolute top of the crypto market? That is what most people are concerned about right now. Because in the span of just a short few weeks, we saw the leader of the free world launching his own meme coin on Solana, the US government establishing a strategic Bitcoin reserve, and Bitcoin finally pushing back towards that 100K mark. But instead of seeing a parabolic rally to new all-time highs, crypto is dumping hard.
It might not be done going down, Scott. A brutal day for crypto prices. Bitcoin at a 3-month low, like you said, under 80,000, almost 30% off its record.
Solana's now down 60% since January, and BTC is about 30% off the highs. But even more shockingly, over $900 million was liquidated from crypto in just 24 hours. And the Fear and Greed Index is telling us that investors are spooked. So what's actually happening here? Is this the dot-com bubble for crypto where everything finally collapses after peak euphoria like it did in the previous cycle? Or are we setting up for one last final leg up? Here's what the experts think. Last week should have been the most bullish moment in crypto history. The US Strategic Bitcoin Reserve was announced, officially marking Bitcoin as a strategic asset for the US government. This was supposed to be huge because Trump then also gathered industry leaders from Michael Saylor to Brian Armstrong at the first ever White House Crypto Summit.
And last year, I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet, and we're taking historic action to deliver on that promise, as you know, around the table. Yesterday, I signed an executive order officially creating our strategic Bitcoin reserve, and this will be a virtual Fort Knox for digital gold to be housed within the United States Treasury. That's a big thing, Scott.
The attendee list was impressive. We saw government officials from the White House, the SEC, the Crypto Council, all sitting alongside the crypto industry, sort of like the Godfather bringing together the 5 New York crime families.
I hope that we could come here and reason together.
And yet the markets dumped.
Was there disappointment? If so, what was the disappointment?
The big expectation was that we would see some sort of Bitcoin purchasing plan in tandem with the announcement of a strategic Bitcoin reserve. But the language in that executive order was very specific about it just meaning that we would hold on to what was already seized in criminal operations rather than roll out any sort of taxpayer dollars into a buying scheme.
Now, this seems to have caught most of retail by surprise, as we can see from overall sentiment nearing extreme fear. And if we think back to Trump's promises about the US becoming the crypto capital of the world, it's fair to see why retail was blindsided.
We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more.
Though some Wall Street analysts saw this coming, and that might be the single biggest clue we have in understanding what is happening with crypto and the bull run, and of course, if we've already seen the absolute top of this cycle. Things are confusing right now because although some analysts still have seemingly outlandish price predictions like 300k Bitcoin, and Murad the meme coin messiah still thinks the bull run hasn't even started, the bear case is also strong here. Here's why some people think we've already hit the top.
We're at the end of the growth segment of our cycle.
But what are the OGs saying? Well, first off, Arthur Hayes thinks BTC could crash as low as 70k, and Hayes has been right many times in the past. He's now warning us that BTC is in a liquidity crunch, and if we drop to 70k, we could see massive capitulation across the entirety of crypto.
Seems to be fading today, not just for the coin itself, but also the crypto-related names. Let's get a check on the moves with Tanea McKeel. Tanea.
But let's look at every major bull run. In 2016 and 2017, we saw multiple minus 25% dips before the final top. In 2020 and 2021, we saw more devastating 50% crashes before that final peak. And this time round, BTC's already hit 109k in January. Sol hit $295. So it is fair to ask if that really was the Pico top, or if we can ever see another all-time high this cycle. Because it really feels like we've exhausted any hopes for any more major bullish catalysts. And here's another analyst's take on why the market seems so confusing and why he thinks the bull run is over.
This reaction after the strategic Bitcoin reserve announcement, we would not be getting this retracement of this news. This would not sell the news. And similarly, after the White House Crypto Summit, we would not be selling the news as we are right now. I mean, most alts today, we're about to go into daily close or the weekly close in a few minutes. They would not be down 15, 10, percent off the daily close if this is what a bull market looks like.
The worst part for those in the trenches is that even Tolley himself was opposed to the current configuration of the proposed strategic crypto reserve. So, should we have seen this coming, and what does this actually tell us about the rest of the cycle? Let's start with the reserve, because South Korea just announced that they will consider adding Bitcoin to their national reserves and even developing a won-backed stablecoin following Trump's crypto initiatives. Now, this news did come as a bit of a surprise because South Korean regulators had previously banned non-residents from even trading crypto back in 2018. But if anything, this shows that when the US is a leader in global economic policy, allies will likely follow suit. If more nation states decide to add crypto to their balance sheet, this cycle could well see us testing new all-time highs again, as analysts like Raoul Pal have predicted multiple times.
There is a 70% chance that Bitcoin has already hit its lowest price for this cycle. With Bitcoin likely at its bottom, altcoins are gearing up for their strongest rally yet. That's the latest forecast from Real Vision CEO Raoul Pal.
So Raoul Pal simply thinks that we're waiting on more liquidity, to which he gives a 70% chance of playing out.
Global M2 is a good proxy for global liquidity, which means number go up.
And finally, we do bang on about this a lot, but the sheer volume of institutional interest in crypto is undeniable at this point. From BlackRock and the ETFs to developments around institutional staking, there is a huge amount of regulatory change that needs to pave the way, and it simply can't happen overnight. Yes, Voldemort's smiley cousin is gone, and the Gary Gensler era of combative SEC is over. Yes, Hester Pierce, aka Crypto Mum, is heading a crypto-friendly task force within the SEC. But no, this doesn't mean that trillions of dollars of capital will be used to pump your bags overnight. Institutions are coming, but they're slow. Here's Ripple CTO David Schwartz explaining why institutional adoption could be the key to crypto's broader retail adoption as well.
I feel like we really are on the cusp of a mass institutional adoption, both of DeFi and of other blockchain technologies. I think this is also like one of the key obstacles to mass retail adoption. A lot of people in the space previously thought that retail adoption was like the big wave, but I think institutional adoption is a precursor. You have to connect to where people are. You have to go to where the value is. You can't build a new financial system from zero, ignoring the existing financial system where everybody's money is, where all the value is, where the real world is, trillions of dollars in value. You can't just say, oh, forget about all that. Let's just build something new over here.
So, is it all over? One simple explanation for why crypto is tanking, other than it all being over forever, is to do with how crypto and traditional finance are increasingly correlated. Now, we don't like to hear this, but crypto is still following the stock market's risk cycle more so than its own narratives. Now, we see very similar pullbacks with Nasdaq and the S&P 500 compared to assets like BTC and Sol. This increasing correlation means that riskier asset pullbacks are simply more pronounced. And as Raoul Pal very kindly reminds us once again, crypto is volatile.
We are still early stage within the final year of the crypto bull market when a lot of the big gains come. It's time not to lose your shit. Have patience. See the bigger picture.
Bitcoin, for example, has experienced 20% corrections while maintaining a 600% gain from the cycle lows. And to a less dramatic extent, the same is true for traditional markets as well.
Right, Bitcoin's volatile. It's always going to be more volatile than the S&P. The S&P's vol 15 and Bitcoin's vol 60.
So, in simpler terms, Bitcoin is about 4 times more volatile than the S&P 500. For example, QQQ pulled back 12% this time round, which is not unprecedented. It was a 15% pullback in August. And the S&P 500 almost closed the day with more than a 3% loss for the first time since 2022. And according to Bloomberg, the S&P 500 is also close to falling through its 200-day SMA for the first time since August, which is incredibly bearish. But arguably what makes things even worse this time round is that unlike last August, Trump refused to rule out a recession, which of course tanked stocks even more.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big.
Some analysts are even arguing that it's not just a crypto crash, but a market-wide crash driven by Trump's tariffs that could continue for the rest of 2025. But if we choose to listen to people like the Mooch, we could end up with a slightly more optimistic outlook, at least for the coming 3 to 6 months.
I think what David Sachs has done, frankly, is brilliant because he's trying to create a bipartisan commitment and a bipartisan understanding to digital assets and the space of digital assets in the United States. So the trading is sloppy right now, but I think if you look forward over the next 3 to 6 months, you'll see a lot more institutional buying. And the fact that the United States is going to hold this asset means that other countries, Andrew, are going to end up buying this asset as well. And if you think about the assets that are in our strategic reserve, they're nonpartisan. I don't think there's a debate in the Congress about holding gold or holding oil that the U.S. holds in its strategic reserve. And I think we want to get Bitcoin to that position, and it will take some time. And I applaud these guys for having patience.
And the mooch isn't alone in this assertion, because Cathie Wood also thinks that the second half of 2025 could be extremely bullish for investors. And she is certainly putting her money where her mouth is. So yes, things look bleak when you compare the 2000 dot-com bubble with today's crypto chart. And yes, there's definitely noise coming from both sides of the argument about the bull run being over or continuing. It's increasingly difficult to discern signal from noise. So for those of us knee-deep in the Solana ecosystem, here's something to consider for the coming days.
Calm down, have patience, let this play out. Solana, I know many of you are in Solana, and Solana got nuked because of the collapse of the meme coin economy. Now, I think Solana, as you know, is a very broad, deep protocol. There is a lot of activity that goes on. There will be other activity that replaces memes. Some memes will come back to life. It is not what people are saying. It's a scam coin. It's a dead coin. It's all fucking nonsense. But Solana has overshot versus global M2. And that is this last leg of the cycle. So Solana is looking very cheap. You should be thinking about the dips. Solana should outperform Bitcoin for the rest of this cycle, and Ethereum too.